Delta Airlines, one of the largest and most successful airlines in the world, achieved record revenue and profitability in 2023, despite economic headwinds and labor challenges. How did Delta do it? And what are the challenges and opportunities ahead for the airline industry? Let's dive in. Delta Airlines reported operating revenue of $58 billion and pre-tax income of $5.6 billion for the full year 2023, a near doubling over 2022. This is a remarkable feat, considering the impact of the pandemic on the travel and hospitality sector. Delta attributed its success to its industry-leading operational performance, best-in-class service, and diversified revenue streams, including premium, loyalty, cargo, and MRO. Delta also benefited from strong international demand and a positive inflection in the domestic environment, as well as lower fuel prices and improved fuel efficiency. Delta expects to grow its earnings and cash flow in 2024, with a guidance of $6 to $7 per share and $3 to $4 billion of free cash flow. One of the key drivers of Delta's revenue growth is its loyalty program and co-brand partnership with American Express. By the way, American Express will announce their earnings very soon, and I will cover that in a video, so subscribe for that. The airline reported that its loyalty revenue improved 11% in 2023, driven by strong co-brand spend growth. Remuneration from American Express for the full year was $6.8 billion, up 22% year-over-year. Delta's loyalty program SkyMiles has over 100 million members and offers a range of benefits and rewards for frequent flyers. Delta and American Express also expanded their co-brand portfolio, launching new products and features to cater to different customer segments and travel needs. Another factor that boosted Delta's revenue is the pent-up demand for leisure travel and international destinations, as travel restrictions ease and consumer confidence rebounds. The airline reported that its international passenger revenue was 25% higher versus the December quarter 2022, with double-digit revenue and capacity growth in the transatlantic, Pacific, and Latin regions. Delta also saw a surge in leisure travel, especially during the holiday season, when it delivered record revenue and the highest travel volumes in its history. Delta enhanced its network and product offerings to meet the changing preferences and expectations of travelers, such as adding new routes, increasing frequencies, upgrading cabins, and providing more flexibility and safety. However, Delta also faces increased competition and cost pressures as the travel and hospitality industry recovers from the pandemic. The airline reported that its non-fuel unit costs increased 2.3% year-over-year in 2023, mainly due to higher labor and maintenance expenses. Delta also faced challenges in hiring and retaining qualified staff, as the labor market remained tight and the industry experienced a shortage of pilots, mechanics, and other personnel. Delta also encountered more intense competition from other airlines, especially in the domestic market, where low-cost carriers and new entrants gained market share and put downward pressure on fares. Delta responded by focusing on its core strengths, such as operational excellence, customer service, and brand loyalty. One of the unique aspects of Delta's business model is its ownership of an oil refinery in Pennsylvania, called the Trainer Refinery. The refinery produces gasoline, diesel, and jet fuel, and Delta exchanges the non-jet fuel products with third parties for more jet fuel. The refinery is operated by Monroe Energy LLC, a subsidiary of Delta Airlines. The refinery has several benefits for the airline, such as allowing it to hedge against the volatility of jet fuel prices, generating additional revenue by selling non-jet fuel products, and enhancing its sustainability and climate action efforts, as the refinery can produce sustainable aviation fuels and reduce Delta's carbon footprint. According to Delta Airlines' December quarter and full year 2023 financial results, the company had $30.6 billion in total debt as of December 31, which is a decrease of $4.1 billion from the previous year. Delta's CFO Dan Janke has outlined a plan to reduce the company's debt by $5 billion in less than 2 years. One of the strategies is to increase business-related travel, which has a higher yield than leisure travel, and can generate more revenue for the airline. Delta also aims to optimize its fleet and network, reduce its non-fuel unit costs, and improve its operational efficiency and customer experience. Delta has a strong financial position, with a capitalization of $27 billion and a common stock equity of $6.6 billion. In conclusion, Delta Airlines' success in 2023 can be attributed to its industry-leading operational performance, best-in-class service, and diversified revenue streams, including premium, loyalty, cargo, and MRO. Delta also benefited from strong international demand and a positive inflection in the domestic environment, as well as lower fuel prices and improved fuel efficiency. Delta's partnership with American Express was also a key driver of its revenue growth, with its loyalty program and co-brand spend growth contributing significantly to its bottom line. Delta faces challenges and opportunities ahead, such as increased competition and cost pressures, labor challenges, and the need to adapt to changing customer preferences and expectations. However, Delta's strong financial position, strategic focus, and customer-centric approach position it well for future growth and profitability. I believe Delta Airlines will take flight like this. Don't forget to subscribe.